Hey folks, welcome to a product review at Finominal. Today we're going to look at BlackRock's systematic multi-strategy fund, which trades under the ticker BIMBX. Now, the fund manages around $7 billion. It charges 120 basis points, and it aims to offer total returns that are lowly correlated to fixed income and equity markets. So let's find out what makes this fund so successful. And we're going to kick off with a quick benchmarking analysis. Now, if you look at the fact sheet of BIMBX, it effectively states the ICE BOFA 3-month Treasury bill index as a benchmark, which is effectively cash plus. Now, if you look at the performance of BIMBX versus S&P 500 and a short-term corporate bond index, effectively it's very difficult to see anything here, right? Because equities perform much higher, as expected. Now, let's add a different benchmark here. And what I'm going to add is the S&P Target Risk Conservative Index, which is an equities bond combination, and that allocates 30% to equities and 70% to fixed income. Now, what you do see here is that the performance of BIMBX has been quite nice since 2016 or 15 actually in that case, right? But you also do see that there has been this drawdown during COVID, and that indicates that this product, BIMBX, is not too dissimilar either from this target risk conservative index, which is dominated by fixed income, or just via that corporate bond index, because the trends are the same. And in fact, you could probably lever the corporate bond index and you would see that the blue line and the green line would converge. Now, what's the issue with that? The issue is that BIMBX is aiming to offer returns uncorrelated or lowly correlated to fixed income, and that does not seem to be the case. Now, let's run a returns-based factor exposure analysis. And so I'm going to revert to adding the S&P 500 for equities exposure. And what we see over here is the betas to asset classes. And we see that to S&P 500, to bonds, which is like investment grade bonds, the US dollar index, and commodities. As expected, there's almost no exposure to the US dollar index or commodities, right? You do see consistently positive exposure to the S&P 500, which means there is equity risk in here. And indeed, even the fact sheet mentions an allocation of around 15% to equities. But what you also see is that the exposure to bonds has been consistently positive. It varied across time. But it would be difficult to argue that this fund is lowly correlated to fixed income markets. And so it's kind of interesting to keep in the back of your mind, right, that this is being positioned as an alternative fund, right? And it's not really that alternative. Now, that's for BIMBX on a standalone basis. Let's have a quick look in terms of how this fund has done versus some peers. So here we selected 4 other multi-strategy or alternative funds, one from FS, Blackstone, Credit Suisse, and Goldman Sachs. Now, first thing we're going to do is compare the performance of those funds. Now, what you can see here is that since 2017, BIMBX has done quite nicely. It's very consistent, right? You can see that some of the other funds did worse during COVID. So it's quite nice to see in terms of the kind of return stream that BIMBX is offering. Now, what's even better from a Sharpe perspective, BIMBX has offered the highest Sharpe with 1.45 over the last, well, close to 8 years, right? Versus the highest other fund was the one from FS with 0.91. So that's great in terms of offering high total and risk-adjusted returns. Now, the one thing that's kind of like interesting to look at is the correlation versus just bonds and equities. So what you do see where BIMBX differentiates itself from those peers is that it's lower in the correlation to stocks. So the beta or the correlation is 0.39, right? Versus some of those other funds have a higher correlation to stocks. but the difference is that BIMBX has a high correlation to fixed income, to bonds. Now, you could jiggle around and add more peers, right, that are more fixed income oriented. So that would be one thing. But on a standalone basis versus these kind of other multi-strategy alternative funds, BIMBX has done quite nicely. Now, the final question that we asked ourselves is, given that the performance has been quite impressive, can we replicate it? And so in this case, we're going to use our portfolio simplifier tool, which is more meant for portfolios, but you can, of course, look at BIMBX as a portfolio of a few or many uncorrelated strategies. And what's kind of interesting, so we do a few replication portfolios, given that we only have one security we're analyzing rather than a portfolio of securities. The only thing that's kind of interesting to look at is the replication portfolio, which effectively takes the return of BIMBX and disintegrates it into its core factor exposures. And effectively, what you then get is a portfolio that is comprised of low volatility stocks, of short-term corporate bonds, and of gold. And you can see the allocations 24%, 58%, 17%. And the more interesting part is that if you look at the performance of BIMBX is the one that's labeled as import portfolio, which is kind of hidden behind here. And you can see the performance of the replication portfolio, which at least in terms of trends was identical or very similar. And that's kind of interesting to think about in terms of that you can kind of replicate the performance of BIMBX. It is worth mentioning that it is an active strategy, right? So allocations changed, right? And this is a rather static replication. But broadly speaking, exposure to low vol stocks, to corporate bonds, and a little bit of gold would have generated a very similar return profile. And the attractive thing is that from a fee perspective, the replication portfolio is a mere 13 basis points, which is much cheaper. So that kind of concludes our performance review of BIMBX. It has done quite nicely from a return perspective, either absolute or risk adjusted versus peers. The Sharpe is quite high. Having said that, we should reflect that the exposure it is providing is certainly not what it aims to do, which is like low correlation to bonds. It is correlated to bonds, fixed income markets. And as we've shown here, here's also some thoughts in terms of how you could replicate it. Hope that helps. Have a nice day.